Welcome back, dear investors. Another interesting stock market week. So we are again Friday, August 28th, and I will be sharing with you the latest update of the most important companies. And you remember, I'll try always to cover the top 100 companies, more or less. And actually this week, you're going to see I'm going to put a little bit more focus on Nvidia and Salesforce. I will cover as well Chinese manufacturer Li Auto. I think it's always interesting also to have a different perspective than just US markets, even though, of course, US markets are the most sought after markets. And then as well, giving you an update on the Meta case and trial that will not happen because they settled. But I will explain this at the very end. Right, so starting as always with a small perspective on macroeconomic indicators. So the one that I always look at a weekly basis is the weekly economic index, which the US Federal Reserve puts together. So this week it has been even growing to 285%. The last reading from the US Federal Reserve is from August 22nd. You remember this is a weekly index that is an aggregation of around 8 macroeconomic indicators and is nearly real time. And I really like to look at this one. So for the time being, it's definitely not looking like we would have a recession when you look at the WIE. Sahm Rule, of course, this one is just updated on, I think it's a monthly basis. The July reading is still negative, which is good actually. So also there, no recession signals for the time being. Showing you as well on Vinley how, you can follow yourself these indicators. You have them aggregated in the same tool where you would analyze stocks, ETFs, and cryptos. So here, the three first ones that I analyze on a weekly basis is the Industrial Production and Manufacturing Index, which is of course not a weekly one, but the three main is the IP-Man, the WIE, which is a weekly one, and the Sahm Rule Recession Indicator. So they all actually look good for the time being. The second thing that I also like to look at is delinquency rates, because I believe that when the market is having an issue, the first people to be hit will be consumers. So one of the three metrics that I like to look into that, again, you have inside Vinley are the consumer delinquency rates. You have the single family mortgages in the US, the credit card loans, and the consumer loans. Those are not weekly readings, of course. Those are, if I remember well, monthly readings. But you see that actually it's improving. The situation is improving compared to a couple of months ago, actually, and even a couple of years ago. So just to show you that you have these indicators available in Vinley. Right, let's start with Nvidia. So everybody was expecting, I think it was Wednesday evening after the stock market closing, everybody was expecting, as everybody speaking about the AI bubble, and yes or no, is it a bubble, when will it burst, yes or no, the latest quarterly results of Nvidia. And they were good, in fact. Let's be very honest, they were very, very good. So there has been, again, growth there. So if you compare it on a year-over-year basis, they have 106% year-over-year growth. So that's doubling the amount of their economic activity, which is fantastic. The data center revenue continues to grow at 16% quarter-over-quarter. Margins, we can discuss about margins, but gross margins are really good. Let's be very honest. And when you listen to Jensen Huang, the CEO, and also to the CFO, do remember, I think it's a lady, the CFO from Nvidia, they even claim that they could book more if they would not have a supply, let's say, shortage. So it's not a demand shortage that they have, but really it's a supply shortage. So that's interesting to read. What was the market reaction? So actually, I'm putting here plus 8%, but directly, so after closing, the stock went a little bit down by a rough cut, a little bit more than 1.8%. But the day after, when markets were open, in fact, everybody recognized that results were very strong from Nvidia. So this is basically what you see here. So the stock went roughly up from 210 US dollars a share pre-earnings announcement to 226, I think yesterday, if I'm not mistaken. Now, I want to go a little bit deeper into Nvidia this time and take a little bit of time because, this is the company that is at the center stage of the whole AI bubble conversation. So first of all, I want to show you from a valuation perspective in Vinley what I currently observe. So, of course, you can imagine that this is a strong growth play if you would invest into Nvidia, and you see that the price to earnings is currently sitting just below 30. Price to free cash flow is sitting at 43, which is, at least for me as a value investor, too high. Price to book, you would pay 24 times the balance sheet of the company. That's a very extreme multiple. But again, everybody takes his own and her own decisions. On the absolute valuation, and you have to really focus, if you see my mouse moving, you have to focus on the valuation inputs that I put here. So when I look at free cash flow, if you would consider that Nvidia is able to keep a pace of 10% growth for the next 30 years, and the cost of capital for microprocessors is currently sitting at 13.65%, you could of course reduce this if you are happy with 8 or 9%. But I consider, given the uncertainties related to microprocessors in the next 30 years, that 13.65% is a very reasonable cost of capital, because you never know that maybe quantum will completely disrupt the current, let's say, industry around manufacturing or anything else. Much more optimized AI models, for example, or competitor, you don't know. So 13.65% seems reasonable for me, so I kept it like this. And just imagine, and I don't believe that is possible, that a company would keep 10% growth for the next 30 years. Given the current amount of earnings, the stock is overpriced. This is what Vinley is at least suggesting here. So Vinley suggests that the stock is fairly valued at around 130, 140 US dollars, something like this. So just to share this with you, and again, it's not the intention of providing any investment advice here. What is more interesting is when you look at the fundamentals now. So actually I started with the valuation, with the absolute valuation, but I wanted to share with you also the fundamentals. When you go into Vinley and you look at the fundamentals, so the fundamentals look strong. I mean, you see most of the metrics are looking good. Even asset turnover is close to 1. Of course, dividend yield and share buyback yield, they are low, so they are below inflation, because Nvidia is investing their money, and I will speak actually about it in the next slides, is investing their money somewhere else instead of giving it back to shareholders. What was interesting to see is that the Beneish M Score is showing orange, and when you go into Vinley and you ask and you look at the 8 variables that actually compose the Beneish M Score, you're gonna see in fact that there are 2 which are strong signals of direct earnings manipulation, which is the asset quality index and the amount of total accruals versus total assets. They are flagging red. The other ones, incentive and pressure indicators, of course, the sales growth index, that is red. It's not the first time that that one is red. So actually I wanted to, and again, I'm not suggesting that Huang and his management team are manipulating the numbers. I just want to share with you how me as an investor, I do look at, for example, when the Beneish M Score is orange, and understanding what is behind, why are those numbers flagging red, in fact, some of those sub-variables of the Beneish M Score. So the whole conversation, of course, is linked to this, let's say, circular economy around AI investments. And I will be explicitly showing you extracting this from the latest quarterly report, how Nvidia has been investing into various companies and how that is reflected as well in their results, in fact. And this is, I think, a graph that Bloomberg produced already many months ago, where you actually see that Nvidia has invested into OpenAI, and Microsoft is as well buying hardware from Nvidia, but Nvidia is investing into one of the companies, Nebius, where also Microsoft is selling services, so cloud services to it. So this is really this circular economy where everybody is fueling everybody in a closed circle. And this is something, I mean, when you look at, let's say, typical revenue theories, this is not good, in fact, because what is missing here is the outside customers. Are outside customers really generating this amount of demand, yes or no? So we don't know this. I believe that the demand is very high currently on AI. We will see if it will continue or not, in fact. So what I wanted to share with you, because when you see this graph, I mean, and I want you to train your eye as a serious investor to look into and be able to read where can I observe this in the financial statements of Nvidia. So in the latest 10Q report, remember it's an unaudited report, so there is in the accounting, let's say, notes, so that come after the financial statements. I want to just highlight the note 5 and the note 6. So the note 5 is where you see everything that is cash and cash equivalents, which includes marketable securities. And for those who are a little bit specialized, you know that companies, they carry those marketable securities with a level 1 to level 3. So level 1 is directly observable on the market. Level 2 is somehow observable on the market. market, and level 3 is barely observable on the market. And you see, in fact, that if you look at public investments, so coming back to this circular thing, so they have invested into other companies that are listed on the stock market, like Intel, for example. If you see here, Nvidia has a stake in Intel. So actually you see that that amount of investments has gone up from $17 billion to $36 billion in 6 months, which is in fact huge. And of course, I mean, they take the opportunity of having a lot of profits to, of course, then take positions into publicly listed companies. And then also at the same time, so going back to this circle, of course, they are invested into OpenAI, for example, as well, or for example, Elon Musk's XAI, so SpaceX, and Grok models. So, and of course, some of those companies, not all of them, but for example, OpenAI, they're not listed on the stock market. So for that, if you want to see the order of magnitude, how much money they're investing into private equity, the Note 5, which is cash and cash equivalents and marketable securities, will not show the position in OpenAI. This is what you have to look at Note 6, which is non-marketable securities. So this is clearly privately held companies like OpenAI that has not IPO'd. And by the way, if you read the news over the last week, I mean, there is really an issue from a management perspective at OpenAI. A lot of senior people are leaving the boat on OpenAI, so that's probably one of the reasons why they are delaying their IPO versus Anthropic. But if you look at private investments over the last 12 months, so the private investments of Nvidia have gone up from $3 billion to $48 billion. That's rough cut 12, 13 times, in fact, the initial investment. So this is huge if you compare the July 27, 2025 figure with now the latest closing. So here you clearly see in a tangible way what Bloomberg was referring to. This is clearly what you can see when you look at the accounts, which are unaudited, but you clearly see this type of circular, let's say, investments that actually go around. One thing that I wanted to share with you as well, and that's in fact the Tata sub-variable in the Beneish M Score, which is also flagging red, which is the account receivables. So one of the things that, and you can have your own opinion about this, but the first thing, if you look on the right-hand side, the first red bubble here, what I want to highlight, is that the amount of accounts receivable has also nearly doubled over the last 6 months. So what does it mean? It means, and this is actually written in the Note 7 of the financial report, and of course nobody reads this, but Nvidia has been a little bit more flexible or softer on the payment terms for their customers, which is, some would say it's a good practice. Well, I would say, having been running myself companies, it's always risky when you actually are either financing your customers or on the other hand, you are being softer on payment terms. What is the reason why you are being softer on payment terms? Is there a reason behind that? Maybe your customer doesn't have the amount of cash and you are pre-financing that. So that's a type of thing, and you can see it below. So they clearly say that in certain cases for investment grade customer purchases, so investment grade is probably customers like OpenAI, we have and may in the future provide longer payment terms ranging from 90 days, so 3 months, up to 1 year to assist customers with large data center builds depending on size. So this is again a financing mechanism that is shown in the account receivable, and that's why in the Beneish M Score, the Tata sub-variable of the Beneish M Score is actually flagging red. Right, from a business update perspective, just want to share the main highlights. Of course, they have started shipping the next generation Vera Rubin platform in August. They have an expanded partnership with AWS where they have like a back order of more than 2 million GPUs, which is of course up to 2029. This is important to have this type of back orders as well. Again, they speak about financing partnerships with Apollo, BlackRock, Blackstone, Brookfield, Goldman Sachs, and KKR to raise up to 500 billion and more for AI data center build out. So again, they are fueling their own product revenues. And of course, I mean, Jensen Huang, the CEO, he addressed the criticism that Nvidia's billion investment, and this is what I was showing you here. I mean, it's 36 billion into public listed companies and 48 billion, that's 80 billion that they have invested into other companies, that of course this creates a circular financing loop. And he's saying, well, yeah, we understand the risk, but we consider the risk is being limited because our customers will be reusing this, so we don't see an issue with that, in fact. And of course, one thing nonetheless worth mentioning is, of course, that they have zero revenues from China because there is an export restriction by the US government, US federal government on that, in fact. So just to keep this in mind, that they don't have any revenues with China. And if you remember last week, I was covering Alibaba and amongst others, what they're doing with Quen. And so China is, of course, trying to pick up the pace in terms of building their own AI type of processors, if it is GPUs or other type of architectures. Okay, next one is Salesforce. So, for those who would not know Salesforce, so ticker CRM. So already, when they took up that ticker, they are very clearly the global leader on customer relationship management. So that's typically marketing and sales activities. And so they reported this week as well. I think it was as well Wednesday, if I'm not mistaken, where they reported their earnings. Earnings were good. So the stock reaction was, so the market reacted extremely positively. So plus 23% yesterday when the market opened in New York. So the revenues were up by 11%, which is not huge. So if you look at the tendency, if you would go into the financial report of Salesforce, you would see that they are, over the last quarters, they are constantly at 9 to 12% growth quarter over quarter, which is reasonable. So they raised their full year revenue guidance by another $0.3 billion US. And the free cash flow, which is of course something that I like to see, is the free cash flow has been growing a lot, in fact. But there are two things. And again, I want to also, through this weekly Vinley radar, with a lot of humility, try to teach you how to read what is behind the numbers and not just reading the numbers that you see everywhere in the press. And there are two concerns I want to raise on the numbers of Salesforce. The first one is that a big portion of their earnings per share. So if you look here at the earnings per share, the earnings per share has jumped by 86%. So if you look at the last 6 months, so if you compare year over year, the first 6 months of 2025 and the first 6 months of 2026, you see that the EPS, so the earnings per share, has grown from 358 to 667, which is huge. That's plus 86%. That's like, wow, that's great. But, and this is where I consider that they're a little bit fooling investors, at least investors who don't understand and who do not know how to read the numbers. Why is that? The first thing is that so there are two reasons why there is a plus 86% jump in the earnings per share. The first reason is that they have, in fact, a gain, an unrealized gain on paper, because they have an investment into Anthropic, and that investment, I would say fairly valued, has increased by 2.6 billion. Of course, they have not sold the position, and Anthropic is not on the stock market for the time being. So this is just a fair valuation of an asset that they carry. It's actually carried in the balance sheet of Salesforce as a strategic investment. So if you look at the equity investments, there is a line that says strategic investment. So that line has been increasing by, amongst others, is 2.6 billion on paper, in fact. That's the investment into Anthropic. So this is, of course, a non-cash gain, but it is reflected in the income statement. Remember that the income statement is a non-cash view on the results of a company. That's why we have the cash flow statement for that. The second thing, and of course a lot of people have not looked into this, is that they have, and you see it here on the graph, they have spent huge amounts of money in the last quarter between dividends and share repurchases, so share buybacks. They have spent 27.5 billion on this in the first quarter of the fiscal year 2027, which is huge. And what is the effect on the earnings per share? Well, the amount, so an earnings per share is the total earnings divided by the amount of shares. When the company is buying back shares from the market, the amount of shares that is available on the market is going down. If you look at my bullet point number 2, they actually have reduced by 12% the amount of outstanding shares. So you're going to have a mechanical effect that, of course, their results were good. I'm not saying the contrary, but a plus 86% is, amongst others, explained that rough cut a third of that jump, and you can read the footnote here in the financial report, is linked to, so $2.43 per share on a $6.67 is linked, in fact, to the Anthropic, fair valuation that has increased. So that's rough cut a third of it. And another 12% is linked that they have reduced the amount of shares that will be actually dividing the total amount of earnings to come up with an earnings per share by rough cut 12%. Of course, they have spent money on this, no conversation about this, but just this is for me important that you understand. If you would, for example, tomorrow decide to invest into Salesforce and you would see, wow, their EPS has nearly doubled. What is the reason behind this? There is a reason behind this. So just pay attention to this type of elements. Last company I want to share this week on earnings is Chinese Li Auto. Maybe some of you do not know, probably some of you do know NIO, BYD, this type of companies. But I want to share with you, just a very brief, because I don't have the time in the weekly Vinley radar, share with you what Li Auto is actually doing. So they position themselves as a very, very high-tech company. This is high-end luxury car, or close to high-end luxury cars. It's like a little bit like the type of Mercedes that you would find in China. So you clearly see here the positioning where Li Auto is positioned. And so just to give you a sense, so you see here they're of course very much on full electric vehicles, and one of their flagships is the Li9 or LIL9, which is like a super family car with a fantastic interior, really, really, really high end. And just wanted to share with you also, for us to be educated, what does high end mean in China? So if you take the L9 high range, so with most of the options, you will be probably sitting at around 70,000 US dollars, which is very big when you consider the purchasing power of Chinese citizens still for the time being. So you clearly see that they are really, really high end on the Chinese market, and they're mostly present in China. Actually, I think they do export through a couple of, let's say, very selective distributors, but most of their market is actually in China. What were the results? Well, because we speak a lot about China attacking German car manufacturers, US car manufacturers, but Li Auto is also, China being their main market. It's a young company, let's be very honest about it. I think they have less than 10 years of existence, and the revenues actually were not fantastic. Revenues were down. So they delivered nonetheless nearly 100,000 vehicles, but still the volumes are down year over year. The Chinese internal car market is very saturated. Just look at the amount of companies that are selling cars in China for all, let's say, type of citizens, in fact. So the company is also having negative earnings. The cash flow is not very good. So that's the type of thing that you have to consider. That you understand when you invest in such a company, what are the underlying elements of a company. When you look at, so I was trying to show you here an extract from Vinley. When you look at the fundamentals, you see that a lot of the fundamentals are either orange or red, because the company, of course, is losing money. So the company is not in a good situation for the time being, but of course they are fueled by their shareholders. And you see also when you look at the share price has been punished over the last, let's say, 3 to 4 years. They were at rough cut, I think the highest, so the, let's say, 5-year high was around 46 dot something US dollars a share equivalent, and now they are at 12. So the share price has been divided by 4, and there is a reason for this. Just look at the Vinley fundamentals. You see that, of course, the company, this is typically an early growth company that is listed on the stock market. So this is if you would invest into such a company, that's the type of let's say, bet that you would take. And of course, price to earnings is negative because they have negative earnings. From a price to book, what is interesting is that today, if you would have unlimited budget, you would only pay a little bit more than 2 times the balance sheet of the company. But so just to share with you how to look at these elements. Last but not least, Meta. So Meta Platforms, so the owners of Facebook and Instagram. So I want to share with you that an update on what has happened since last week. So you remember last week I said that there was a trial that was starting with 4 US states that were leading an overall, let's say, a class action against Meta for not respecting child safety policies, and that could have actually nearly destroyed the company. So of course I was expecting it to happen, is that Meta settled even before the trial happened. That is, with all due respect for let's say for my US friends, this is typical in the US, that in order to avoid, you just actually settle before. So what is the settlement agreement? The settlement is that Meta will pay 18 billion of settlement. So 70% will go to the states. It's rough cut 13 billion US dollars. And the other 30% are linked to a specific condition. So there's a contingency, as we say, on this 30 remaining percent, which is rough cut 5 billion US dollars, which is that TikTok and YouTube have to adopt similar teen safety rules. So if TikTok and YouTube adopt similar rules, then Meta will as well pay the remaining 30%. And they have foreseen to take the hit rough cut during the next 10 years, in fact, to pay this off. The new rules, just to summarize, is what do they include? They include a default 2-hour delay time limit. There's going to be a midnight to 6 a.m. night mode, muted school hours notification, stronger parental control, and also not counting not showing the likes on for the children, in fact. So I think, you know, I'm not the biggest fan of Mark Zuckerberg, but because it's really the economy about buying and manipulating attention, including from our children, but also us as adults. But yeah, so this is, I think, good news for the Meta shareholders, let's be very honest about it. But and I hope that indeed, so with these new rules coming into force, and that TikTok and YouTube may also then follow this movement. All right, that's everything I wanted to show you this week. I hope that you enjoyed again this weekly Vinley Radar. Do not forget to like this video, to subscribe to the channel, so that will help also us grow the channel as well. And if you're even interested to see, because you have seen that I'm extracting analysis elements out of Vinley, you go to www.vinley.ai and you can register for free in order to do your own analysis. With that, thanks for your attention and talk to you next week. Thank you very much.